Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar, and this is our 623rd video, baby. Yeah. Traders, 622 other videos, a lot like the one you're about to see, are on YouTube now for you to learn from. So after you see this, go back and look at the others. Traders, before I go any further, please know this: futures trading is risky and can cause substantial financial loss. And that is no joke when I say that. You can lose more than what's in your account. You can lose more than what your grandmother has in the bank. You can lose everybody's money attached to you if you don't know what you're doing. Please be careful in these markets. If you do not have risk capital, realize that these markets are not suited for every trader or for every trading account. But for you traders out there that like to play the ponies, that like to ride these markets, boy, oh boy, do I have something for you. Traders, this video is being filmed on August 23rd for August 24th. That's Tuesday, 2010. However, unlike most videos that I do tonight, they're geared for trading tomorrow. This one is not only geared for trading tomorrow, but it's a further look forward at what could happen in the next few weeks ahead. This video is not just for tomorrow. It is a look forward viewpoint of what we think is going to happen in the markets. And traders, I gotta tell you, the head and shoulders formation that I have seen in the indices is very scary, and this video is going to be called A Lesson in Market Tops and Bottoms, featuring the head and shoulders formation. Traders, the head and shoulders, it's back with a vengeance. These markets have dandruff. We have a problem here, and I'm going to show you what that problem is. What is that? Is that the police?
The police. It's okay.
I thought maybe it was the authorities coming after me. Traders, I know what that is. That's the sound of the comment question of the day. The comment question of the day. Traders, comment question of the day today comes to us in a hermetically sealed envelope from Anuj Bahai. Anaj Bahai.
It's good.
You don't know how to say it either, do you?
I do not.
This letter comes from this guy, and he's from the USA. He didn't give us his address. And exactly how am I opening the comment question of the envelope today?
You can use this.
I can use. Oh, we got us a little spatula. We're gonna do some pancakes maybe on the way. All right, we got a spatula. Which end am I using? Front, back, sideways, like this, like the back. All right, I can do this. So we are going to open up today's comment question with our spatula, and what we are going to do is find out what's going on in here. Traders, we have a comment question of every day. I do my best to answer these questions for you, and this is out of the video. Nice catch. Traders, here we go. And he says, it's Anoj Bahai, actually, from the USA. It starts out, it simply says LOL. We all know that means laugh out loud. And he says, Oscar, let's talk about the head and shoulders that failed. They are the biggest bear traps of all times. Do I think that they are the biggest bear traps of all times? Well, I can say this, Anuj. If you think that head and shoulders formations are the biggest bear traps of all times, you are going to really appreciate the video that I'm about to do for you. Traders, that is a perfect question to go with tonight's video, because in tonight's video, a lesson in market tops and bottoms featuring the head and shoulders formation will absolutely answer any apprehension you may have as to whether or not you should use a head and shoulders formation to call market movement. Traders, do yourselves a favor, get a pencil and a piece of paper, write down these charts. You might want to write down some dates if I can remember them as we go through the charts, because I'm going to do a look back to what has happened in 2007, and then I'm going to show you where we are today in 2010, and I want you to do a comparison. Traders, very important charts coming before you right now, and with no further ado, let's go look at some charts. Okay, traders, what you're about to see here is a very, very unnerving look at the U.S. stock market. What you are looking at back here is the September daily S&P. Traders, I had this exact same chart in YouTube videos, video after video, live class after live class at my site through the end of '07 and the beginning of '08. I was doing YouTube videos where I was saying in the YouTube video, traders, look at what's going on here. You have multiple head and shoulders inside of a big head and shoulders. And let me show you what I mean. Left shoulder, head, right shoulder. You can see with the 3 blue circles. Inside the left shoulder is an inverted head and shoulders. You move up into the head and you get an upright head and shoulders, which turns into another upright head and shoulders. As you pull into the right shoulder, you have a series of head and shoulders, upright and inverted. The right shoulder is formed, and we break all the way down to 666. Traders, this was 1577. I was doing these videos. I was standing on my head screaming at traders, the top is in. Why can't you see what's going on? Look at the head and shoulders pattern, okay? That was October through, I guess, March of 2008. So it was October '07 through about March of 2008, this whole series of videos that we did about the head and shoulders. But what I want you to pay attention to is look at this. Multiple head and shoulders gathering together inside of a big head and shoulders. Then you have the V top, you can see with these dotted blue lines. Then you see the red thing that shows you it's a rounded top as well. Well, let's look at today, traders. Let's take a walk to the present. This is the past. This is the present. We have a left shoulder, a head, and a right shoulder. In the left shoulder is a shoulder, head, shoulder, which morphs into an inverted head and shoulders, which then has a little head and shoulders here at the top, creates another head and shoulders, which turns into an inverted head and shoulders, which then turns into another inverted head and shoulders, which turns into an upright head and shoulders. And the whole darn thing is one big head and shoulders with the V top and the rounded top. Traders, this looks like the exact same chart I showed you in '07 to the beginning of '08 when we broke tremendously. Look at where we are right now. I'm afraid for us. Listen, I'm a bull at heart and I'd love to be bullish, but how can I be bullish when this is what happened in the past and it created a downdraft all the way to 666, and here we are now, and the question is, will it go up or down? I mean, what do you think's going to happen? It looks to me like this is the twin brother or twin sister of this, and the next move will be the same, down, just like we had here. Traders, this is unnerving. This is scary, but what this is an eye-opener and a gift from me to you Omniacs, because, look, I called this before it happened the first time around. I promised you Omniacs I would get you prepared if this happens again. Here we are. This was '07, the beginning of '08. Here we are in 10, and you got the same formation. Big head and shoulders, rounded top, sort of a V top as well. Multiple head and shoulders formations forming within the right shoulder, the head and the left shoulder. Then the downdraft came. Before '07 to '08, now present time, 2010. This is today. Here's where we are right now. Traders, look at this picture. I'll leave it up for you for a moment and then see if you think that this looks very much like that, or I should say this looks very much like that, and this result is likely what will happen now. Okay, a nudge, A-N-U-J, our comment question of the day. After me showing that to you, do you still feel that head and shoulders formations are bear traps? I don't think that was a bear trap. Take a look at that for yourselves. I hope this helped to answer your question. On to the next charts. Okay, traders, what do you have before your eyes right now? This is the very exact same chart, because I save all of my charts, that I put before you in YouTube videos starting March 6, 2009, and I claimed that we had an inverted head and shoulders, which now the head is below and the shoulders are up above, and that there were multiple head and shoulders building within that, and that this would call a bottom. This was March 6, 2009, traders. We went from here all the way up into the 11s. All the way into the 11s. This is 666. The same pattern, shoulder, head, shoulder with multiple head and shoulders inside of it, The same pattern creates market bottoms as well as market tops. The difference is this one is inverted. Inverted means the head is lower, the shoulders are up above, like Mickey Mouse, so to speak. But inverted head and shoulders gives you market bottoms. The upright head and shoulders will give you market tops. The inverted one gave us a bottom. We called the bottom for the very same reason why we were able to call the top in the end of '07, and for the very same reason why I just put those two charts before your eyes a moment ago. If we were able to call the top because of formation like this, on the opposite, of course, in '07, then we were able to call the bottom based on this formation in '09. What should make this latest chart I just showed you any different? It is the exact same formation, only it would be the bearish one. I hope this does not turn out to be the case, but I trade what I see, not what I hope for. Just wanted to make you realize that the same patterns create bottoms as well as tops. Let's go now look at a few charts here. Traders, it is not just the S&P, one of our leaders, the Russell 2000. This is the daily bar chart right up till today of the Russell 2000. Multiple head and shoulders formations usually produce a big drop. You have shoulder, head, shoulder, which lends itself to another head and shoulders because it's shoulder, head, shoulder, which lends itself to an inverted head and shoulders, which lends itself to a larger head and shoulders, and inside of the head is a head and shoulders, and inside of this right shoulder is another head and shoulders. That, my friends, is multiple head and shoulders gathering together. Again, I just showed you in this last chart piece that multiple head and shoulders gathering together inside of a larger head and shoulders is almost always a telltale sign of a drop to come. So our leader, the Russell, or one of our leaders, absolutely looking bearish. Let's look at another chart here. Traders, the Dow Jones Transportation Average Daily Bar deemed the leader of U.S. indices. Shoulder, head, shoulder. In the right shoulder is an upright head and shoulders, another upright head and shoulders, and in fact, inside of one of these head and shoulders, I could actually pull out another little one. So you have multiple head and shoulders gathering inside of a larger head and shoulders, which usually creates a market top. That's what we expect when we see a pattern like this. This is your leader. Traders, I'm not saying that tomorrow on Tuesday the market's going to fall apart. What I am saying is that you better keep your eyes open because this is a pattern that we have seen before, and it usually creates the downdraft. On to the next chart. Traders, one of the markets that seems to trade many times hand in hand with the S&P is the crude oil. Look at what we have here, and crude oil is an indication usually of what traders expect the markets to be like. Will they be busy or not busy? Will the economy heat up or not heat up? Crude oil will move based upon whether or not a lot of supplies are going to get used. What do we have in crude? Big shoulder, big head, big shoulder, lots of multiple head and shoulders building up inside of the head and shoulders. Downdraft expected. If the U.S. stock market is going to come off based upon whatever fundamental is going to tell us that the economy is weakening again, then the crude should come down. And with this formation, it looks like the crude very well will come down, especially if these head and shoulders formations pan out. Now, traders, let's go look at currencies because I want to show you that this is happening in more than one area. Let's take a quick look. Traders, euro currency has a head and shoulders formation. This is the September daily bar. And if you ask me, it looks like the party might have already started. Right here, we have just come out of this head and shoulders, and the next likely move is the downside. We actually have a projection for this head and shoulders at our site. If you'd like to know what that projection is on the downside, you come on down to www.livewithoscar.com, jump into my chat rooms, ask me about the projection on the euro. I'll be more than happy to share that with you. So now you've seen that the indices absolutely have head and shoulders and multiple head and shoulders. You've seen that that usually creates a drop. I showed you that in '07 to '08. Then the drop came. Then I showed you in '09 what a bottom looks like. Then I just showed you in this chart segment what we are looking like at this moment in time, and it all involved head and shoulders formations. Well, the crude oil had them. The currency, the euro currency, very, very major, important currency on our planet. It has a head and shoulders. Let's go look at the dollar index. Traders, now we're looking at the dollar index, and what is the dollar index showing us? Three things on this chart. One, obviously, the head and shoulders inverted this time. And remember, I showed you before, an upright head and shoulders can create a downdraft where an inverted head and shoulders usually creates the upside. This is an inverted head and shoulders. Inside of the right shoulder is this bull flag that we broke out of. Broke out up to here. We are breaking out of the right shoulder right now. And on top of that, look at this huge parallel trend that we broke out of. A very nice parallel channel. We broke out of it as we made the inverted head and shoulders formation, created a bull flag inside of the head and shoulders formation, and started to break out. Traders, that is bullish. So the formation called the head and shoulders is a telltale sign when a market is getting ready to turn. Traders, if you do not think that that's true, look back here. Shoulder, head, shoulder, drop. It works. Take my word for it. That happened right before your eyes. I didn't even recognize that until I was standing here doing this video. There was a head and shoulders. There was a drop. Here's an inverted one with a bull flag. Now looking for the upside. Traders, I hope this helps put things in perspective for you as to where the U.S. stocks should be heading to. Remember that no piece of technical analysis is foolproof. This does not mean that the dollar is going to explode and the stocks are going to drop, but it sure does happen and has happened many times in the past when the formations I just showed you start to occur and start to gather. A big market change usually takes place. Do your own homework, pull your own charts. Please come to my site and ask questions. Thank you so much. So, traders, you seen those charts? I mean, I wish I did not have to stand in front of you and do what I just did with that chart segment, but I always try to inform my Omniacs, keeping them abreast of what should happen next based upon past performance. Traders, you saw that comparison, right? Where we were in 07 to where we are now in 2010. Traders, I kid you not, for my video fans that have been with me since 06, I absolutely called that market at the top. I gave the exact number of 1577. I put those charts before your eyes. I gave everybody a chance to get out of their positions, get out of their 401ks. The market did crack. A lot of people followed me. Then I used that same technique to call the bottom in 09, March 6th through March 9th of 2009. That very same technique using that chart I presented before your eyes a moment ago. That was how I called the bottom then. Now we have this formation again, traders. Will it work a third time? I say yes, but hey, we'll see what happens. A stop is your best friend. We know that. So you make sure you have stops in no matter what happens. Again, traders, this is not Bloomberg, CNBC. These are no scare tactics. I do not use scare tactics. All I do is read the charts and present you with my findings. Now, they're not always going to be rosy, but they are what they are. Traders, if you like the analysis put forth in this video and you'd like to be trained by me personally, I am a broker and you can open up your trading account directly with me and have direct phone access to me whenever you need me to learn how to get the analysis right, which in turn should make you a better trader. If you would like to have an account with me as your personal broker, you come on down to www.livewithoscar.com. Click open a trading account with Oscar and fill out the forms, or you can fill them out right online, shoot them through automatically. Thank you so much. Traders, don't forget, many of you traders have been signing up. I mean, literally by the hundreds, you're becoming Omniacs, but half of you do not make it into our chat rooms. You new traders out there that are coming to livewithoscar.com, realize this. Click on OmniChat and come into my trading chat rooms where I can converse with you, show you my ideas, and let you know what I'm thinking, and I can help you with questions. So come on down to my site and jump into the chat rooms, and please use the forums, traders. We have hundreds of traders, actually thousands of traders that are Omniacs. Many of them like to use our forums. It's a question and answer, sort of like a bulletin board area where you can leave a question or post an answer to someone else's question, and we banter back and forth. Use the forums, but especially use the chat rooms, traders. All right, I don't know if I want to do anything else in this video because I want to go watch the markets. We are bearish for the S&P tomorrow, Tuesday. We are bearish for euro currency on Tuesday. We are bullish dollars. But as I said, our stops will be in no matter what it is that we do, because we all know that a stop is your best friend. Traders, comment question of the day. Thank you so much for participating. We love your comments and questions. The mail is coming in like crazy. Please keep sending it. We plow through the questions and we use them to create videos for you. And sometimes these guys hit me with surprise ones, and I like those too. So come on down to the site and please leave your comment question of the day, and we'll put it in the next video segment. All right, traders, give me contact day and night 702-629-4755, and always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Always remember, futures trading is risky and can absolutely result in substantial financial loss. Traders, trading futures is not for everybody. It's not suitable for every trading account. And as always, past performance is not indicative of future results.